So today's agenda is pretty simple. Okay, US CPI data released at 2130 GMT plus 8. I'm not going to hold you guys up for too long. Okay, I'll try to end the session by 9. Okay, GMT plus 8, so that you guys can have like 30 minutes to prepare for the trades. Of course, I'll be around in Traders Club and to break it down and to look at all 28 pairs, all right, to help you guys see if there's any. Definitely not for Paul because the cross pairs are not very favorable to you. Okay, so yeah, okay. Today's agenda is short and sweet, all right, CPI. So the US CPI data, okay, during the previous release, okay, they actually on annual basis, okay, US CPI actually come close to a 40-year high level, all right. Where is the, okay, let me just, okay, before I start sharing trade ideas and things like that, all right, standard protocol. Any information shared in this video is not intended to be a trade recommendation, okay? It is solely the opinion and views of the speaker, me, all right? So please remember to do your own analysis prior to entering any trades. Okay, so let's look at the data, US CPI data, okay? Yeah, like I mentioned, on Forex Factory, usually we only get to see month-on-month data, all right, for the US CPI. Previous was 0.8 for headline, okay, previous was 0.8, right now it's 0.4. For core, previous 0.5, this time around, they're expecting 0.5 as well. To be honest, this time around, I won't be paying attention. I won't be paying too much attention to the monthly data. Okay, instead, you guys may want to head over to investing.com, okay, economic calendar, whereby they actually show the year-on-year data. All right. So what I'll be paying attention to is the YOY, year-on-year data. Okay, now the highlighted one is the headline inflation data. In December, okay, they actually report the November's inflation, annual inflation, to be 6.8. Now, this time around, okay, inflation in December is expected to be 7.0. I think I'll show you guys the graph. All right, 7.0, I believe, is close to, once again, inching closer towards the 40-year high level. Okay, but I think it needs to be like 71 or something. Okay, so over here, I already have the chart open. Okay, it's US Consumer Price Index. This is the headline data. All right, so they're expecting 7.0. Now, sorry, but I have to put you guys through this graph over here that, because I need to show you guys like when was the last time they actually hit 7.0, all right, which is, of course, you guys probably would have guessed 40 years ago. So 40 years ago is 1980 something, all right. So over here, okay, it's 1982, okay, 1st of July, okay. So it's, yeah, it's pretty much 40-year kind of level, okay, whereby inflation is 7.1, all right. So if, okay, if it turns out to be, well, 7.0, I mean 7.0 and 7.0 is pretty close. If it hits anything higher than 7.1, okay, what's going to happen to the US dollar? Okay, my take is this. If inflation were to be at least as high as 7.0, okay, US dollar may weaken. Okay, inflation, the thing with inflation and currency is this, okay, higher inflation, okay, higher inflation level tends to make the currency weaker, okay. So if we were to get something like 7.1 and 7.2%, we can expect the US dollar to weaken against the other major currencies, okay. And if we were to look at the year-on-year data for the core CPI data, okay, previous release was 4.9%, right now it's 5.4%. It doesn't matter. It doesn't matter if it's core or headline at this moment, okay, because the limelight now is, will it actually breach the 40-year high level? Okay, so 4.9 to 5.4, it's like half a percentage point higher. Okay, anything higher will really, run the Fed crazy. Okay, the Federal Reserve will go crazy. Okay, no more transitory inflation. All right, we are going to hike interest rates to actually tone it down. Okay, but for the time being, we are likely going to see the weakening of the US dollar. Okay, so with that, that is the main limelight for tonight. Okay, let's head over to the charts. Okay, now if you guys have any, what do you call that, any pairs that you guys want to look at in particular, after I don't know, I think I have like some, let me just open up my notes. Okay, I think 4 or 5 pairs, okay, that I feel that has a lot of trading opportunities, okay, if the US CPI data were to turn out to be better or at least as good as expected, okay, hence leading to a weakening in the US dollar. First pair, pound dollar, okay, probably my favorite pair tonight, all right. Not sure how the spread is going to be like for you, Paul, but yeah, hopefully it's narrow enough, okay. Anyway, you probably want to have an early rest, okay. So pound dollar at the daily time frame, okay, at the moment is testing my 1.363 resistance level, okay, but come on, it's news, right? So let's go down to a lower time frame. Let's look at H1. Now, you guys can see that, all right? Let me just mark it out for today. Today is the 12th, right? So it's from here all the way to the top, okay? So for today, so far, okay, pound dollar has been moving within 42 pips, okay? As you can see over here, 41.5 pips, okay, within the range, right? As we guys may know, okay, pound dollar usually is a high, you know, it moves a lot, all right? 40 pips is, it's likely that, you know, the market is waiting for something to go on and things like that. In this case, US CPI data, okay? So at the moment for today, it has been, you know, flirting with the resistance zone of 1.363, okay? So I would say, okay, if the US CPI data turn out to be better than expected, okay, it may lead to a weakening of the US dollar, the resistance level here may actually be broken, okay? In the case of it's being broken, okay, I will look at a buy entry at 1.365. It's a neat level over here. I have a bit of OCD, okay, so I need to like place the line as close to 1.365 as possible. So you guys can see that, okay, to break above this resistance level, okay, we will need price to actually hit above the previous high, or the recent high, okay, around here. So 1.365 will be a safe level. And 1.365 right now is trading at 1.3638, pretty much 1.364. It's only 10 pips away, okay? So hence, if pound dollar were to trade to 1.365, buying opportunities will be there, all right? And for those of you who are more, I would say, cautious, okay, you guys want to wait for a clearer break, okay, in case this may be a forced break of the resistance zone, you guys can actually consider another level, which is 10 pips higher, 1.36. I can't see the line. Let me get this. 1.366, okay, the upper blue dotted horizontal line, okay, would be a safer option. But like I've mentioned just now, okay, before the call, when there's high impact news, most likely I will only be going for scalping trades. Okay, so if I want to scalp, I wouldn't want to wait for trades to move, prices to move quite a bit already, okay, before entering the trade. All right, especially when it comes to high impact news like NFPs or the US CPI data. Hence, I would prefer, okay, if you guys are trading short term, okay, scalpers out there, okay, if you guys are scalping, I would prefer to look at an entry at 1.365, okay? For those of you who trades on M15 or M30 or H1, you know, anything higher, your stop loss level may probably be behind, okay, which is below this resistance level, right? Then you guys can consider the 1.366 level, which is a more, a better confirmation, okay, a better confirmation that the market sentiment is, you know, we are definitely going up. Okay, US dollar is definitely weakening because of the better than expected US CPI data or something like that. Okay, so pound dollar, pretty much my favorite pair. Okay, then by the way, I will be sharing the price level later on in the Traders Club chat. Okay, so no worries, just, you know, just pay attention to what I'm just saying right now. Okay, the second pair that I'll go over is the Aussie dollar. Okay. Now, this pair is another of my likings because this is 12, 11, 12, because you guys can see, okay, for pretty much the whole of today, okay, GMT plus 8, right? Aussie dollar has been moving within a tight range of 27.4 pips, okay, indicated over here, okay, well, pretty much 28 pips, okay. I'm not sure how many of you guys actually heard of this strategy before. Okay, it's called the straddle strategy. Okay, whereby you know, it's simple. All right, so people will actually, traders will actually wait, where's my drawing tools? I need my rectangle. Oh gosh, where is it? A balloon? No, I need a rectangle. Okay, you know what? Forget about it. I'm not going to waste time on this. All right. So basically, all right, a straddle works like this. Okay, whenever there is a consolidation or a, what do you call that, arranging, okay, traders will actually draw a rectangle, all right, with the top and the bottom edge, okay, touching the high and the lows, okay, respectively, of the range. Okay, in this case, as highlighted by this red rectangle over here, okay, and the range must be tight. I mean, if you are tight depending on the time frame, all right. If we are looking at H1, okay, in this case, I would say a 30 pips range, okay, in this case drawn over here, is definitely considered a tight range, all right. And of course, it depends on pairs, right? If it's 30 pips for pound dollar, it's definitely very tight, okay, because pound dollar tend to move a lot. And then, you know, if let's say prior to a high impact news like the Bank of England monetary policy decision, there may have actually such consolidation, then it means a straddle pattern may actually form. Okay. Now, for those of you actually who actually use Bollinger Bands, okay, you guys can add, like, you know, the 2 standard deviation and the 3 standard deviation Bollinger Bands, and then you will realize that, okay, the Bollinger Bands are actually you know, you will actually, most of the time, okay, in normal situation, all right, when there's volatility, the bands are wide apart, all right, are very wide apart, okay. And then when there's consolidation or ranging, okay, or there's low volatility, holidays, and things like that, the Bollinger Bands tend to squeeze, tend to narrow down, okay. Hence, the Bollinger Squeeze phenomenon, okay. That is one very good way to determine if, you know, recent price data has been squeezing, has been consolidating, okay. And then with that consolidation, okay, spotted, you can actually draw a rectangle there, like in this case for the Aussie dollar, all right. So with these over here, how do we trade the straddle strategy? Okay, the straddle strategy is simple. We don't know to which direction, okay, up or down, will Aussie dollar break towards, okay. So what we do over here is this: we can actually place a buy stop order and a sell stop order, okay. So where we usually place our buy stop order is slightly above the top edge of the rectangle, okay. So okay, I have to remove this rectangle because it's oh, I don't need to. Okay, let me just put a let's say 0.723. Okay, there goes the rectangle. All right. Okay, so if you guys see that this is like oops, I didn't get the. Okay, so we can actually have a buy stop order slightly above the top edge of the rectangle. Okay, at the same time, we place a sell stop order slightly below. Okay, so the bottom edge of the, actually, you know what, this should be the correct one, right? Okay, so the bottom of the rectangle, sorry, it's 0.7196, probably 0.712. Okay, I will place somewhere around 0.719, which is around here. Okay, hence, okay, we can see that we get this this thing. Gosh, why are you not working? Okay. Okay. Hence, you can see a buy stop order, okay, above the top edge of the rectangle, and a sell stop order below the bottom edge of the rectangle. Okay. So when we place a buy stop and a sell stop, okay, we have to place it before the news event. Okay. In this case, before the US CPI data, probably like 5 minutes before. Okay. If the price is still ranging within the rectangle, okay? And then what happens is when the news is being released, there is a there is a big movement. Okay, there's a big movement, maybe upwards, maybe downwards. Now, in the case whereby it triggers either one of your stop orders, okay, buy stop or sell stop, we have to close the other order right away. Okay, now suppose US CPI turns out to be 41-year high level. Hence, we are seeing the US dollar weakening. Okay, hence Aussie dollar strengthens upwards. All right, then our buy stop order will be triggered, and then we still have our sell stop order there, right? We will have to cancel off the sell stop order because it's part of our risk management, right? In a scenario whereby price would retrace back for whatever reason and hit our sell stop order, then it may not be good, okay? Because we will have two trades running, two trades of the different direction running at the same time, okay? So once the buy stop or the sell stop order has been hit, cancel the other order, all right? That is how the straddle strategies usually perform, okay? And as to how, how much above or below the edge of the rectangle should we place our buy stop and sell stop, this really depends on individual, okay? There's no fixed answer to it, 10 pips, 5 pips, or 4 pips and things like that, okay? There's no such, there's no fixed answer, there's no best answer to it, okay? So Aussie dollar would be, I would say, a very good straddle opportunity over here, okay? Because in a scenario whereby, US CPI will be lower, okay, than what was being expected, okay. Right now, you know what, we actually, US CPI has come back down to maybe like a 35-year high level, okay, which is good for, which will likely lead to a strengthening of the US dollar, okay. A higher inflation data may actually lead to a weakening of the US dollar, okay. A lower inflation data may actually lead to a strengthening of the US dollar, okay. In this case, we may actually be seeing Aussie dollar moving downwards, okay, because it may not be inflation may not be as too big of a concern as previous months already, okay, because of its stagnation and things like that, okay. So it will move downwards and trigger your sell stop and cancel your buy stop order, okay. So Aussie dollar is a good setup for straddle strategy, okay. Nonetheless, okay, if you guys prefer to just look at one direction or prefer to enter trade at that very moment, okay, yeah, you can just don't bother about the straddle, just it will still be a good buy or sell opportunities, okay. It just depends on, because some people they prefer to trade, some traders they prefer to trade on price action. They prefer to look at M1 candles, seeing how they react before entering trades, okay. So you can actually do it without straddle, okay. Personally, I'm actually expecting the inflation data to be better than expected. Hence, I'm actually expecting US dollar to weaken, okay? But anything may happen, all right? We have to consider the other selling opportunities as well, okay? So Aussie dollar, my second recommended pair to look at later on, all right? The third pair, also another antipodian pair, okay? New Zealand dollar. There's no need to go to it daily anymore, okay? Because price is not, at the zones and things like that, and we are definitely not looking at such high time frame. Let's see. Okay, so for today, okay, so far the New Zealand dollar has been, okay, initially when at the start of the day it actually strengthened, all right, and then throughout the whole afternoon, or throughout the whole most of the time, or most of the day, okay, most part of the day, it was actually trading within 30 pips. Once again, a consolidation before the release of a high impact news data, okay. I'll be looking for buying opportunities as well, okay, and my entry would be at 0.682. Why 0.682? Okay, why 0.682? It's because it's a little bit tricky over here, all right? If let's say this is at a higher time frame, we are looking at this at a higher time frame, say for example, maybe H4 or maybe daily, okay, then I may not be paying too much attention to this 0.68 level, okay. It's usually the lower time frame that we need to pay more attention to it, because now US data turns out to be good, US dollar weakens, New Zealand dollar strengthens, okay, and it moves up to 0.68 level. The common mentality out there would be, are we ready to trade New Zealand dollar above the 0.68 round figure, okay? Or should we still stay below 0.68? That would be one of the consideration in the markets, okay? Especially right now, it's so chaotic, it's so fast and action-packed. US CPI data released to be very good, it was about to be higher than expected, and then hence US dollar is weakening and things like that. So it's usually, traders are more or less, I would say, a bit fickle-minded at that point of time. Traders will be waiting for traders, the other traders to actually push price higher, push price above this level before, feeling more convinced that, it's time to trade New Zealand dollar above the 0.68 level, okay? Hence, because we are trading the news tonight, later on, okay, we will want to see a clear break above the 0.68 level before looking for buying opportunities, okay? Hence, my entry level will be at 0.682, okay? This pair is a bit, it's a bit riskier, okay? It's a bit riskier than the previous two, than the Australian dollar and the pound dollar pair, okay? Which is why I am more cautious, hence the level is at 0.682, okay? But if you guys are scalpers, okay, keep in mind, just take a few pips and go, okay? Shout out in the chat, congrats, have a good night rest and things like that, okay? If you guys are scalping, you guys can actually go lower, be more aggressive, okay, in your entry. As high as 0.6810, you guys may actually look for buying opportunities, okay? Yeah, but for those M15 or H1 traders, whereby your stop loss will probably be below the 0.68 level, okay, then a 0.682 entry price would be a preferred a preferred choice in this case, okay? So that is for the New Zealand dollar, and at the moment, okay, it's actually heading downwards. All right, it's 0.677. It's like some 23 pips away from the key level of 0.68. Okay, so I'm not sure if New Zealand dollar actually has a stamina to break above. All right, but we'll see how it goes. Worst come to the worst, we still have pound, we still have Australian dollar, okay? And we still have the next pair, which is dollar CAD. Look what dollar CAD is doing. Nice, neat, okay? It has been weakening for the whole day, all right? Where is 12th of January? Okay, over here. Since the start, all right, it has already gone down by, oh my God, I don't even know if it can continue going downwards. Okay, we really need a 40-year high US inflation data in order for US dollar to actually weaken more to push dollar CAD downwards, okay? Dollar CAD has already moved 94 pips, 94.3 pips downwards, okay? At the moment, it retraced by a few pips, which I don't really care because it's just a few pips, okay? But realize this, okay? It has already broken my support of 1.264, okay? In a scenario whereby we see a very high US CPI data, okay, and US dollar were to weaken, dollar CAD is likely going to go further down, okay? And I need to remind you guys, okay, oil prices has been rising recently as well, okay? And that will definitely add to additional strengthening boost to the Canadian dollar, okay? Hence, more downward pressure on the US CAD, okay? So CPI data turned out to be very, very high, okay, higher than expected. Dollar will receive a double whammy when trading against the Canadian dollar, okay? So dollar CAD is something that I will pay attention to. It has just recently broken my support, and but I need to highlight this level as well, okay? Once again, another key level, the 1.25 level, okay? The potential profit may not be that high as compared to the Australian dollar pair and of course the pound dollar pair, okay? Right now it's trading at 1.2545, okay? We have some 45 pips to go, okay, towards the 1.25. Of course, I'll prefer to close my dollar CAD trade just before it actually hit 1.25. I mean, unless you guys are very aggressive, you guys can actually choose to push it further, okay? But I'll leave it to you guys. There is at the moment, there's some, at least some 40 pips, okay? It's like 45, but let's just round it down, just to be conservative. We have some 40 pips. 40 pips for a high impact news is pretty good, to be honest, okay? But I don't really recommend you guys do the whole one trade 40 pips kind of move, okay? Because one trade 40 pips is definitely nowhere close to scalping, okay? It's definitely more like a short-term trade. Dollar CAD tends to be volatile as well, okay? That's the thing. So if you guys want to trade your way down to 1.25, yes, you can. But you know, enter your trade, make a few pips, run. If you think if you think the momentum is still strong going downwards, okay, then enter another trade and close your trade for profits and run and keep trading it downwards. Okay, you don't just enter a trade and wait for the next 15 minutes for it to hit 1.25. What if it actually bounce back up? That's the most I don't know. That's the worst thing that can ever happen to a scalper. Okay, so what you want is enter it, take a few pips. I don't know, a few pips to you guys maybe 10. A few pips to you guys can be 4 or 3, but please remember, okay, you guys got to factor in the commission and the spread. Okay, dollar CAD, I think it depends on brokers, but it's definitely the spread tends to be wider than the Australian dollar, okay, or maybe even the pound dollar. Although pound dollar can widen its spread at times because it's pound, okay, because it's pound. Any pound related pair is pretty wide in terms of spread, okay? So dollar CAD is another pair that I will definitely be recommending you guys to look at. Although, yeah, the profit target is lower than the previous, okay? So the 4 pairs that I've gone through, okay, they are pretty much my, I would say, favorite pair to trade later on during the US CPI data, okay? So is there any questions from you guys at the moment? Are there any pairs that you guys would like to look at? Okay, we have 21 minutes to go to 2100 GMT plus 8. Okay, I would like to give you guys plenty of time to look at the charts just before the CPI, you know, go get a cup of water just to prepare yourself for, you know, this whole thing. Okay, if you guys have any pairs to look at, just put in the chat, just shout out and things like that. Okay, so is there any fastest calendar than Forex Factory? Okay, to be honest, Forex Factory is not the fastest. I have tried experimenting before. Investing.com seems to be faster. Okay, so Forex Factory, there is this, you know what, let's just head over to Forex Factory, right? Okay, so just before okay, dollar yen, I'll go through dollar yen later. All right, I'll try to keep this short and go over to dollar yen later. So every time when there's this, you know, prior to 1 or 2 minutes before news release, there'll be a green button over here that you can click, and then it will turn and load, and then the figures will just appear, right? There seems to be quite a bit of lag. Okay, there seems to be quite a bit of lag as compared to investing.com. For investing.com, we don't have to do that. Okay, look, all data are streaming and updated automatically. Okay, so right now I have the US CPI data section open up. Okay, later on at 2130 GMT plus 8, okay, the figure will just blink. Okay, right now there's this 48 minutes over here, right? It will keep doing some counting down and things like that. Yeah, exactly. I agree with Sunil. You know, it's definitely faster than Forex Factory. So this 48 minutes will subsequently keep counting down to, like, you know, 0 or 1 or something like that. Okay, and then the actual figure will turns out like that. Okay, so I would prefer investing.com over the Forex Factory, but okay, I'm not sure if you guys actually realize this. There is this gray, I don't know what's this radio button over here that they say subscribe. Okay, it's actually something new. I think Jean and I, we just spotted this, I think this morning or something like that. So it's apparently, okay, it's actually a subscribe button. Okay, if you guys have an account with Forex Factory, clicking on this. Of course, I don't have a Forex Factory account. I'm just too lazy to open one. I just need, you know, the data, and not like right now, that kind of stuff. Okay, but if you were to click on the button when you are logged into this Forex Factory account, you can actually subscribe to live feed of the data. Okay, through either email or it's like some web browser kind of notification. Okay, I believe it's something similar to investing.com. At last, finally, they are improvising on their whole system and structure and things like that. Okay, so I'm not very sure how it works. Okay, you guys might want to try it out next time and then compare with investing.com to see if it's faster. Okay, but something I realized, okay, investing.com may be fast, but you know what, let me see if I have it right now. Okay, do I have it right now? Let's see. Data flash. Okay, so I've tried this a couple of times, okay, and I realized that, let me just share my screen so you guys can see it. In our EchoFin, oh my goodness, what's wrong with me? Okay, in the EchoFin trade platform, okay, as you guys can see here, there's this thing called the data flash. Okay, I'm not sure what's wrong with my screen right now. Let me just close a couple of things first. So on the right side, okay, you actually see like widgets, directory, and things like that. So you click on this top right hand corner button, okay, widget, and then there's a series of buttons on top. There's this data flash, okay. Hold on a second. What about calendar? Is it data flash or calendar? I think it's data flash. Yeah, I think it's data flash. Either one. Okay. Not sure if I actually have the. Yeah. Okay. Data flash. So I'm not sure why my this is not working. I think I may have some flash, flash, what do you call that, blocking or ad block that sort of like mess this thing up. Okay, but basically, click on data flash and you will see a series of economic events over here, including the US CPI data. And what I suggest you guys do is open up this page over here. Okay, when the time comes, okay, when the data is being released, there'll be like a thing kind of a sound, okay, like a blink kind of a sound, and then the data will actually appear. And to be honest, it's anytime way faster than Forex Factory. Okay, I've tried it before for I think some of the low impact data. I just want to try to see how fast it is in case I get questions like which calendar is the fastest and things like that. Data flash is actually quite fast, to be honest. It's even I haven't tried it with investing.com, but data flash is quite fast. You guys might want to try it later on, okay? And otherwise, it also has a voice. Yes, correct. I've never tried a voice before, but I've heard from Scott, okay, that they actually read out. Like, for example, US CPI data release is, I don't know, 7.2%. Yeah, that's something like that, So you guys can just stare at your chart, look at how the market sentiment moves and things like that, while at the same time, you have someone reporting to you the actual figure when it's being released. So it's actually a very useful tool over here. Okay, so you guys might want to give this data flash a try later on. I think it's better than just alternate tapping to Forex Factory or investing.com just to check data, or look up and look down and things like that. Because to a scalper, you just want to look at your chart and not roll your eyes like any other places. Okay, so yeah, let's go back to the dollar yen. Okay, euro yen and pound yen. Okay, no problem. Let's go over to dollar. Let's go over to dollar yen first. All right. You know what, Sunil? I have to disappoint you. Okay, I have to disappoint you because early on when I was looking at dollar yen, it's not a very good pair to trade, to be honest. Why is that the case? Okay, why is that the case? Let's look at this. Okay, I know that everyone may have different support and resistance zone. Okay, so whatever I'm trying to share, whatever I'm sharing right now is based on my my zones. Okay, so I have a support at 115. Okay, even if this is not a support, keep in mind 115 is actually a key level. Okay, there tends to be a reaction. When prices move close towards the key level, the round level, and things like that. Okay, at the moment it's trading at 115.4. Okay, so how much have you moved so far today? Okay, similarly, okay, to the Australian dollar, okay, the dollar yen has moved rather, I would say, just a little bit. Okay, 26 pips for dollar yen is really low. All right, for the whole day so far, and of course a potential straddle can happen as well. All right, we have a tight range. Okay, we can put a buy stop on top of the edge of the upper edge of the rectangle, a sell stop below the bottom edge of the rectangle. Okay, but think of it this way: if the US CPI data turns out to be better than expected, and US dollar to weaken, guess where dollar yen will move? It will move downwards. Okay, and it will go very close. Okay, breaking below 115, actually the bottom edge of the rectangle is 115.2. Okay, we are just 20 pips away from the 115 key level. Okay, I mean, you guys can actually do a quick one, just scout like 5, 6, 7 pips out of it and just let it go. Okay, or if you guys are more aggressive, ignore this whole straddle. Okay, right now it's trading at 115.442. You guys will have more, probably like double, okay, the trading potential, double the profits potential than if you were to trade straddle. Okay, so you guys can be more aggressive. You guys want to trade, if you guys want to trade dollar yen, okay, and look for selling opportunities right after the data release and right after you get a confirmation from the market sentiment that US dollar should be weakened. Okay, that is how I'm going to trade dollar yen. But to be honest, I have 4 other pairs to look at, like I've covered previously. So unlikely I'm going to look at dollar yen. Okay. One of the reasons why you guys should look at dollar yen, okay, is probably because the spread is most of the time very narrow. Okay, it's not wide like pound dollar, or usually for ECN accounts it's like 0.2, 0.1, and during high impact news events it may widen to half a pip or maybe close to 1 pip for dollar yen. Okay, so yeah, that's one of the consolation for trading dollar yen tonight later on during the CPI data release. Okay, buying opportunities, yes. Okay, let's say if let's say for some reason the data turns out to be way lower than expected, okay, hence inflation may not be an issue at the moment in the US, okay, based on the December's data, then dollar yen may actually strengthen. Yes, then you will have a pretty, I would say, wide trading of potential opportunities, okay, to profit from. All right, so that is for dollar yen. Not so recommended, okay, but if you guys still want to look at dollar yen, yeah, that's how it can be done. Okay, then we have euro yen and pound yen. Euro yen, let's look at euro yen. Okay, euro yen. Where is the 12, which is here? Euro yen tends to move quite a bit as well on a daily basis. Therefore, 32.4 pips for today, it means that there's still potential for euro yen to be, to move. Okay, this red, strong downward move over here, which was on the 10, which is I think 2 days ago on Monday, is slightly due to the, I don't know, it may actually be due to the strong, what do you call it, risk-off sentiment, probably caused by the whole North Korean missile issue and things like that. Okay, so my view on euro yen, okay, is I will be looking for buying opportunities, okay, at the moment. All right, so but okay, you can still look for selling opportunities, because with this tight range, that euro yen has been trading for the whole of for most part of today, okay, we can actually look for buy stop and sell stop. All right, so to buy, okay, realize that the 131 key level is here. Okay, once again, euro yen is unsure. Okay, it's still flirting around with 131 level. Should we break above or should we stay below 131? Okay, if we were to break above 131, okay, 131.3 would be the level that I would like to look at for a buy entry. Okay, convince me by heading to 131.3, and then I'll be looking for buying opportunities. Okay, now in a scenario whereby it actually the 131 level should be over here. I don't know what's wrong with. Okay, so if that's the case, okay, sorry, my bad. Let me take back what I've said just now. Okay, euro yen has already broken above 131. Okay, I wouldn't want to look for selling opportunities at this time. Okay, if it breaks below 130.8, maybe I'll be looking for selling opportunities. But at the moment, it's trading above 131. Okay, on an hourly basis, okay, look at how many times euro yen has already tested the 131 level. It tested once over here, it come close to 131 over here, and then it comes close to it one more time over here. Okay, probably like two to three times today already. Okay, it has like tested and bounced off, tested and bounced off. Right now, it's still bouncing off. Okay, so buying opportunities can be looked for at 131.3, which is some 15 pips away, which is, to be honest, it's not far away. Okay, given that we still have like the US opening later on at 2230 GMT plus 8. Okay, so not very keen on selling unless it breaks below 131. I'll look at 130.8. Okay, so that is for Euro Yen. Now let's look at Pound Yen. Pound Yen is probably more action packed, I would say. Pound Yen. Just remove these lines and this. Now, Pound Yen. Similarly, okay, we have the 157 level over here. It has clearly broken above 157 level. Okay, I will only be looking for buying opportunities. Okay, at the moment. Okay, in fact, if you guys want to look for buying opportunities for Pound Yen, you guys may have to be quick. Okay, 157.5 will be an aggressive level. Okay, because it breaks above the recent high. Okay, if you look at this recent uptrend over here, okay, with this trend line drawn over here, it moves upwards. Okay, retrace. It moves upwards. Okay, retrace again, and then stagnate, and then up, and then retrace. If I want to buy, okay, further for continuation or something like that, definitely, okay, Pound Yen will have to break above the 157.44 level. Okay, but of course, let's play safe, right? Let's be more, I don't know, let's just be more cautious about this whole thing. What if it's a forced break, right? So we set our entry level higher than this 157.44. Okay, we put it at 157.5. Okay, when it hit that, I may look for buying opportunities of Pound Yen, and Pound Yen has been really, I would say, pretty strong recently. Okay, so I'm definitely not looking for selling opportunities for Pound Yen, only buying opportunities. Okay. What other pairs would you guys want to look at? What are your thoughts on CAD Yen and recent bond auction that was really strong? Bond auctions. Okay, which bond auctions are you? I don't really focus too much on bond auctions. Okay. The way I trade bonds, oh no, I don't trade bonds. Okay, the way I use bonds for to determine the direction of currency is through bond yields. Okay, so normally I will look at the 10-year US 10-year Treasury yields to determine the strength of the US dollar. Okay, and then for, let's say, for the other currencies like pound, euro, I don't use their individual bond yields from the country, okay, that often as compared to the US dollar, because I mean the US dollar is our main, I would say, main currency that's being traded over here. Okay, so but personally, I wouldn't pay that much attention to bond auction unless, okay, you are trading more of a long term. Okay, more like a swing trade would be the shortest time frame that you want to look at. Okay, then position trade and things like that. Okay, for CAD Yen, okay, once again we see something similar to Pound Yen. Okay, we are seeing a very strong uptrend over here. Okay, clear uptrend, recent uptrend. Okay, H1 due to strengthening of oil prices. Okay, and I don't know, man, OPEC is very optimistic, very confident that the supply that they are providing right now, okay, that the whole OPEC Plus is providing right now, there will definitely be more than enough demand to meet it. Okay, so they are confident, and then that the whole COVID situation is unlikely going to cause a negative impact on oil prices, on oil demand as well. Okay, so CAD Yen, I will definitely be looking for buying opportunities. However, once again, we are seeing that CAD Yen is at the moment trying to break above the 92 level. Okay, well, couple of hours ago it tested, but then the next hour it actually came back down. All right, maybe let's take a look at H4 to have a wow. Okay, on a H4 time frame, okay, we are actually seeing a pretty strong, it has been like bullish all the way, okay, since 11 January at 0200 GMT plus 8. Okay, so the question now is, will this recent uptrend continue? Okay, will it be a continuation of an uptrend, or will it actually fail and bounce back downwards? Okay, so CAD Yen, definitely a buy. Okay, definitely a buy. Let's just look at daily time frame. Okay, just for an overall trend analysis. Okay, look, it's since 21st of December, it has been trending upwards. Okay, so definitely the recent trend, the short-term trend, I would say, okay, would be an uptrend. Okay, H4 is looking good. H1 at the moment is just testing this key level. Now, suppose it were to break above this level. Okay, where should I be looking for a buy? I would say a 92.2 level, okay, would be a level that I'm comfortable with, okay, to buy CAD Yen upwards, okay, 92.2, all right. When was the last time it actually traded that high up? Over here, okay, so that was like mid-October back in 2021. Okay, now you see, as I zoom out, okay, you guys don't have to look at the candles. The point here is, as I zoom out, you guys realize that the last time it actually traded way higher than the 92 level was back in somewhere around here, right? Let me just put a vertical line. Wait a minute, let me just close this. Vertical line way above the 92 level is probably around here. This is mid-August 2015, okay? So 2015, okay? The last time I was actually trading comfortably above the 92 level is back in 2015. Hence, I need to warn you guys, if you guys want to trade CAD Yen, my potential take profit level, okay, unless you can trade comfortably way above 92, okay, my comfortable potential profit level would be no higher than 93, okay? You guys may be looking for, I don't know, a short term, not scalping, okay, but a short term to medium term kind of trade. But let me just put it as green, okay? Too many different, okay, this is not clear. Let's just get some other better colors. Maybe a yellow. Okay, yellow looks good. Okay. If it breaks above 92, okay, and it hits 92 point, let's just go back to H1. Come on, okay. And it goes to 92.2, okay, I will be looking for buying opportunities. My potential profit would be no higher than 93, okay, probably 92.8, okay. The market, okay, will likely react to the 93 level, okay, because it's a, the last time it traded that high, comfortably higher than this level, was back in 2015, some 6 years ago, okay. 6-year high level, multi-year high levels tend to have, tend to be very good resistance and support levels, okay. Hence, traders may want to have a stronger conviction, okay. For example, multiple rate hikes projection coming from the Bank of Canada this year. More oil price strengthening, oil price going to 90. Oh my goodness, if it goes to 90, that's it, okay. We can really expect the Canadian dollar to strengthen, okay. So unless we have strong convictions like this, okay, rumors that say, CAD Yen, oil price may actually hit $100 per barrel and things like that. Of course, rumors tend to be short term, right? Then Canadian dollar may actually strengthen, okay. Potential profit 92.8, okay. Stop loss will probably be below 92, okay, maybe like 91.8 around here, okay. That would be like some 40 pips of stop loss, and then 80 pips of TP. Risk reward of 1:2, risking 1 for 2. I would say this is a good setup, okay, good trade setup, okay, in the case whereby it breaks above and hit to 92.2. All right. Actually, you know what? Thanks for highlighting Cat Yen. Actually, right now I will really be paying attention to Cat Yen, you know, to be honest. But yeah, keep your trade short term for Cat Yen because it will be trading at a 6-year high level. You know, trying to breach above this level will require some conviction. Okay. Any more charts, pairs that you guys want to look at? Okay. If there's no more, okay, I would like to end this call right now. Okay, give you guys some preparation time. Okay, and I would like to type up the prices that I've shared with you guys just now, and well, and to look at the chart with you guys. Okay, so you're welcome. You're welcome. I will provide you guys more with fundamentals as long as you know there's more news coming up and things like that. But unfortunately, this week we only have CPI as a limelight. Okay, so with that, you know, I will see you guys in the EcoFin chat. All right, and let's just carry on our conversations over there. Okay, take care for now. I will see you guys tomorrow during the currency call. Bye.